Good morning, everyone. Welcome to our Friday morning trading session, the end of yet another work week. And it's been a pretty decent week overall. Markets showing a little bit more activity than they have previously. Just one moment here. Okay. Right, so if we take a look at what's been going on yesterday actually we did pretty well considering how choppy the day turned out to be. A little bit of a rally here through the overnight, leaving us with a slight gap up on the open. Trade forecaster saying we are going to be in trend mode for 214 minutes exactly. Well, that would be very welcome to hit a nice trending morning. Getting an early signal here on the hawk, nice macro pullback and a little bit of a consolidation. We are into the hard edge on the eagle and the raptor, and as you know, whenever we encounter the hard edge, we usually anticipate some sort of reaction there. And it's still very early, of course. We're only a couple minutes into the session. The fur is still flying as traders try to sort things out. All right, so now the hawk drifting into a green bar sell situation, and we are getting a red bar buy here off of the eagle, so some conflicting signals going on. Okay, now the red bar buy signal, or pardon me, the red bar buy signal down here and the green bar sell, they're kind of coinciding. Let's see, do we want to give that one a go before it runs away on me? All right, let's try the first in sync eagle signal, and what I'm going to do is I'm going to try it on a second push. $6.36. I can't tell you how many times I end up taking a signal about 5 minutes into the session. Come on. So let's see, where do we have some support down here? Primary resistance is sitting at 5806.75. So I may have to back my stop up just a little bit. Get just on the other side of that primary resistance line. Come on. So this is our first in sync eagle signal. The Raptor struggling a little bit. We're right inside this trading cloud. Might come out of here with a number 3 signal. That would be the hard edge bounce. Definitely an area of some consideration for the buyers and sellers. Very neutral. I suppose you could bracket this range with an OCO as well. Yeah, always good advice, Peter. Peter says, when in doubt, stay out. Flat is a position too. People forget that. All right, we're getting another red bar buy signal here on the Eagle. Hopefully this one will have a little bit of follow through to it. still struggling. All right, here they try it again. Seems like they're holding that trend line pretty well. They've got to get above the high of the morning, however. Yeah, David says, I tend to expect a bit more direction on the open, but this is feeling a lot like yesterday afternoon. The open, it's funny, you get those days where the market just bolts, and if you've been sitting on your hands, you may well have missed the opportunity of the day. And then, excuse me, there's other days like today where the market just can't seem to make up its mind. You Raptor owners, you've got a crossover buy forming now, which is kind of the same as that hard edge bounce, except the clouds got mixed up enough here that now they're in sync. So the Raptor is giving you a cloud crossover signal. You could look to buy this one. I'd probably look to buy it on the second push opportunity. Cover perhaps below the low of the morning. So there's a feasible Raptor trade for you, looking to take advantage of a breakout higher. Ooh, and they slipped me a tick. Stinkers. That's unusual, but I guess it's part of the summer. Well, I have to say I'm getting a little concerned the fact that the market continuing to hold these tops here. Okay, I'm gonna get a lot more aggressive with my stop here in a minute. And the reason I'm doing this is the market keeps bouncing. You see, when it rallied up like this, and it made this little consolidation type pattern, that's very similar to a bull flag, right? We anticipate the market's going to rally out of there. However, now we've got this type of consolidation going on, which is characteristic of a bear flag. So the market really balanced at this point. And I'm just not going to give them any more room. In fact, I may go tighter still. No. No, we'll leave it there. Leave well enough alone. 58.1375. All right, so here comes a bearish push now, and this may well take my stop. If the buyers don't get serious about recovering. on. Sometimes it helps to hold your breath. Yeah. All right. Well, there you go. Got the early tap out. And just as well, it seems, as the market heads a little bit lower. Well, they're still stuck. Can't make up their mind which way they want to go from here. So I guess we've got a rule of three signal here in the Eagle. We also have a first micro macro cross. Things didn't work to the long side. I might consider a short just to see if the sellers are going to follow through. And I do have a second push entry opportunity on this first micro macro cross lower. Okay, so I got filled on that hawk signal. I am going to try to run it out. If they're not going up, then there's a chance they may try to go down and maybe even fill that gap. Wow. Really? Really? Did this just happen? they they fill us to the short side and then nothing? They just fall flat on their face? Has everybody gone to their beach house already? What's going on? Peter, I'm starting to think the same as you. Peter says, when in doubt, book it. Tea time. And it's a beautiful day here in the Pacific Northwest today, a beautiful summer day. Highs today are going to be around the mid-20s. That's centigrade. So for those of you in the States, don't wig out. I know a lot of people still think that everybody in Canada is in an igloo, but let's see the weather forecast here for the Cowichan Valley is going to be about 78 degrees today. So a nice, pleasant summer's day. Okay, so we've drifted back to the primary resistance zone here at 5807. Technically 5806.75 hit it right on the number, taking a little bit of a bounce. I would have hit my break-even trigger already. I suppose I can bring my stops in a little. I don't want to be too quick with them. Okay, so we've got this little swing through here. I'll enable my stops now, or bring them in at least a little bit. There we go. And this is probably close enough that I'll snap the trade to break even now. Peter writes, just did my third trade for $120 profit. I'm done for the day. I wrote down your comment on flat is a position. I do find these words of wisdom helpful. Well, thank you, Peter. Little nuggets whenever I can share them. Hey, way to go, Paul. Paul was first week or second week now of Raptor trading. He says went live with the Raptor on July the 5th. Way to go, Paul, knocking it out of the park. 14 trades, 71% positive. Way to go, man. That's great. Great news. I love to hear when you guys are doing well. And if you're struggling, you should let me know that too, because I will do my best to help. Okay, what are we doing with open profit here? Yeah, all right. I'm gonna get a little more aggressive on my stop. I don't want to give up too much of this. We'll lock in $100. The bar high low, one of the more aggressive stop strategies. Okay, so got tagged there at the reversal. Tidy little profit on that one. Thank you very much. We'll put that back on the shelf for now. Tom's comment here, he's sharing, I'm trading too much, cannot get steady growth, took the buy, then the sell, closed trading too soon. Sorry, Eric. Well, it's a difficult problem. It really is. You know, the two most difficult things that I see traders struggling with, far and away, they overtrade. And then secondly, they manage their stops too quickly. And you've seen me do it in the room here too. I'm not immune to it. There are still times where you get caught up in the action, if you will, or you get fearful for an open trade and you do something silly. Now, the market actually does things to try to entice people to do the wrong stuff. So I don't know about you, but there was a point in my trading career where my trading was so bad, I seriously considered fading all my signals. So if I thought about buying, I would actually sell instead. That's how bad my trading got. But we've all seen, you know, the times where the market will just explode to one side. Like we'll see in 10 or 20 seconds, bar after bar after bar print, and everybody gets all excited. Like let's say it prints lower here, rapidly printing a dozen bars to the downside. Well, what do you think is happening? Everybody is reaching for their sell button. Everybody is, I got to get in on this move. And then, of course, what happens after that? Well, the market makes a big reversal and goes the other way after fooling everybody with that head fake. It is a difficult thing to do, to put a trade on, to leave your stops alone, to try to judge the trade, you know, accurately based on how you set it up. The only real solution that I have found is to have a trading quota where you say to yourself, I'm going to take 2 trades today, 3 trades today, 4 trades today, whatever the number is. I encourage you to make it less than 4 trades, or certainly less than 5. The reason is, if you go in with a small trade quota, let's say you're only going to trade twice today, well, that allows you to be very picky, right? You're not going to start chasing every signal that prints. You get a number 1 cloud crossover signal after this mess. Is that a good looking cloud crossover signal? You know, you don't have to be trading the Raptor for a really long time to say, that's not the best cloud crossover signal I've ever seen. In fact, you know, this is a nicer cloud crossover. But right down here, you know, the market rallies up, we get a little bit of a pullback. Oops. I guess the pullback occurred a little earlier, right there. The Raptor comes out, prints a cloud crossover. I would have actually liked this one better right here, because the clouds made a proper cross, the market rallies up, does its little pullback, and then shows me that it's ready to continue in the new direction. All right, that's the whole point of a cloud crossover. It's showing you that the market is trying to establish a new trend. But my point is, if you're only looking for 2 trades a day, you don't have to go chasing a signal like that. You can step back and you can say, I don't know if I really like that one. Right? The clouds really didn't give me a good cross. I'll wait for the next one. I'll go grab a cup of coffee. Back in a few minutes. Not saying this trade won't work out, but you may have required an ultra deep stop to make that trade work. So that's solution number one. Have a trade quota. Make it low. Make it painfully low. Whatever number you are uncomfortable with is probably the right number. Item number two, when you take a trade, be prepared to walk away from this amount. Pretend you're in Vegas and you just put $250 down on the craps table. They will look very unfavorably at you if you don't like the roll of the dice and you reach out and you take your $250 back. This has to be an amount you are okay walking away from. This is your risk capital. If you don't want to think of the gambling scenario, think of yourself as a retailer. You've just invested $250 in pet rocks, and you're hoping they're going to make a comeback. And if they do, you'll make $100, and if they don't, well, you're out $250. Is that going to ruin your business? Probably not. Hopefully not. It had better not. If this is an amount you are uncomfortable with, the solution is not to put your stop in extra tight, because that only increases the number of times that you are going to get stopped out prematurely. Remember, your stop loss is not a loss unless it gets hit. So it's important that you keep your stop loss a reasonable distance away from the market. How often have you seen the market tag your stop loss? In fact, one of the members wrote me yesterday, she was trading the British pound. The market came down, hit her stop loss to the tick, and then reversed and went higher. Now, she actually made a couple of errors. Her first error was she entered the wrong amount of contracts. She meant to enter 1, and she entered 18. So her first error was not immediately hitting the closeout button. But rather than close out the trade, she figured, well, I have $3,000 that I can lose, so she put a $3,000 stop. Well, what do you think happens? The market sees the orders. Hold on a second here. Let me get a dome. Well, you've all seen the dome. I won't pull up the dome. The market sees the orders. You think the market doesn't see a bunch of orders sitting there at 58.14 and then hardly any orders at 58.13.75? What do you think the market's going to do? You think it's a coincidence that it slips down to 58.14, hits it on the number, and then rallies? It's not. It's not a coincidence. Now, I'm not talking market manipulation. I'm not wearing a tinfoil hat. I don't have tinfoil on the windows. But the buyers and sellers, they see all this. You think the buyers mind letting the price slip a few ticks so that they can pick up a few extra sell orders? Of course not. That's why we need to keep a reasonable stop. So your solution, if you're not comfortable with $250, your solution is right here. Dial down the risk amount here. And sometimes this is the cost of admission. If this is still too much, then consider trading the ETF derivative. Consider trading the spider or the Qs. That will allow you to position yourself, because now you're trading shares instead of contracts. You could trade, 100 shares on the Qs, and you could put on this trade for $50 if that's more comfortable for you. Now, of course, that's going to reflect on the profit side as well. You may only make $20 profit. There's that trade-off. But if you're not comfortable having this amount at risk, then either don't take the trade or dial down your risk or look at trading a different instrument. Once you do take this trade, once you are comfortable with this amount, consider this amount gone. That will prevent you from doing something silly like rolling your stops prematurely only to watch the market rally higher after you've been stopped out because you rolled your stop too early. Now, trust me when I say this is easier said than done. Like I said, you guys, at least when you make a trading mistake, you do it in private. When I do it for the world to see. And I've been doing this for a while, so if it still catches me, then, don't be upset if you still struggle with it, because it is a struggle. Nobody likes to lose money. Nobody likes to be wrong. Check the ego at the door. That's the best thing you can do. If you're wrong today, you're wrong. That does not make you a bad person. It just means that you weren't accurate in your calls today. Figure out why. Was it because you were too quick with the stops? Was it because you weren't quick enough with the stops? There's days where I would do much better snapping my trade to break even or being all in, all out. That's more often the case with me. Forget the runner, Eric. Go all in, all out. Just take your profit. Let's see. Francisco asks, do you have the filter on in the strategies? What is best? I'm looking at the filter section. It has chandelier length, chandelier range, multiple, conservative mode. Which tool is that, Francisco? Is that in the Hawk or the Raptor? John, I'll get to your question here in just a moment. So this now again is the signal generation on the Raptor. Oh, Francisco says all the DTS have these. I guess I should be aware of that, shouldn't I? I know the Hawk, yeah, right here. Okay, the Hawk has it. So well, what this does is it just uses the chandelier strategy as a filter for the trade. So if you turn your chandelier strategy on, it's essentially these parameters here. So if you're producing a signal against the chandelier, then it will filter it out as a negative signal. So it's not going to happen very often. But let's say you were looking at taking this red bar buy signal. If you have the chandelier filter turned on, this signal will not print because the chandelier right now is bearish and you're producing a buy signal. Likewise, for this green bar sell, it would not print. I don't use it myself. It's not to say you can't. It's just going to filter out a couple of the signals that are against the chandelier strategy. The chandelier, a very conservative ATR type strategy. I tend to focus on the higher probability setups anyhow, so I don't find it so much of a requirement. John's asking, Eric, what tactic do you use to stay in the trade? Well, I try to not fiddle with my stops. And sometimes this means actually physically sitting on my hands or leaving the room. So if I set up my trade this way and I have my stop, a lot of times I'll go with the swing strategy because it's only going to roll the stops when a new swing point is made. The best time to roll your stop is when the market breaches a prior swing low. In this case, we're selling. The best time to roll this stop is when the market trades below 58.02. That's going to give you the most staying power. It also requires a great deal of patience. And, you know, a lot of times, like, again, for instance, with this Raptor trade, if I had gone all in, all out, oh, stinkers, that came up a tick short. So I would have got a break-even stop out here, and now I'm back with a hard edge bounce. You know, a lot of times you'll end up doing a little bit better. Just going all in, all out versus trying to run out a trade, because it can take a long time for the market to actually go anywhere, which is evidence today. Francisco says we have it on the Eagle, and when I turned it on the Eagle, the long signal disappeared. All right, so here's the chandelier. Yeah, it would. Because you're getting a buy signal. These are all buy signals, but they're against the chandelier. So it will print the sell signal because that is in sync with the chandelier strategy. So all it's going to do is it's going to make the signals more selective, more conservative still. It's not a bad thing. It's up to you. Like I said, I think just focusing on the high probability signals, I do okay. But as I always say, it is your money. You have to do what you think is best. This darn 5806.75 area, 5807 for short, is going to be a real stinker. We're back here at the primary resistance line, tagged it to the number again. If we can get on the other side of that, I think we might see the market drift down here to the median line, 57.96 half. But 5807, a number you're going to want to take note of. It may well have some influence come Monday again. right, getting a little bit of follow through now. A nice little hard edge bounce. And of course that hard edge bounce here as well. Don't ask me why I didn't put that trade on. I guess I was still explaining something. This hard edge bounce right here, this number 3 signal, is a decent signal to attempt. Why? Why do I think this signal is a decent signal to try to trade? Well, what do we need to see before the market can reverse and head higher? What happens before the market changes direction? Well, we almost always see a test of the extreme. In this case, the extreme being the low. So knowing that the market should try to retest the low at least one more time, gives me an opportunity to try to take advantage of that, which makes this a pretty decent sell signal. Francisco's asking, is the filter at the bottom a chandelier? If so, turning this on may help to keep in sync. No, the filters are all independent. They're all separate programming. They tend to be momentum based, but it's not just one indicator. Oh, they're trying here. They're struggling. Wow, what a seesaw today. Francisco asks, can we use the trend line as a filter? Yes, absolutely, you can. If you're talking about the eagle, there's a lot of traders who only want to trade in sync with the eagle. This was always Stephanie's big thing. If the eagle band was bearish, she would never take a buy signal on the hawk or the falcon. Filters are good, but don't think, okay, your objective in trading is to make money. I know that sounds stupid, but people get caught up in the mechanics of trading. I see this all the time at the trading forum. It's a rabbit hole that people never emerge from. The emphasis shifts from making money trading to tweaking their system.
What are the best settings for RSI? What are the best settings for stochastics? How can I best use Bollinger Bands? And on and on and on it goes. As though the markets work in some logical manner. That just because A, B, and C have lined up, the market must do D. It does not work that way. And that's why people get so frustrated with trading and why they think trading is impossible to do. Trading is not impossible to do. What is impossible to do is to apply a logical set to the marketplace, because the market is illogical. The market is human beings, and human beings do things that are illogical. So, you know, trying to establish filter after filter after filter to filter out bad signals, that's all well and good, but that's not the end game. Adam, I should get Adam to share a story once, long before he started Indicator Warehouse. He was involved with a group of programmers, because Adam's always had this programming bent to him. And they had a system, they developed an algorithm for trading the E-mini S&P. And it worked reasonably well, but every once in a while it would produce a losing signal. So rather than just say, okay, we're going to control our risk, we're going to try to identify when these losing signals happen so that we can avoid them, and let's go with the system, they tore the whole thing apart and they reprogrammed it for that new anomaly. Why did they do that? Because they're programmers. They think like programmers. They're not traders. As a trader, you're going to take losing trades. That's your stock in trade right there. Like, one of my favorite trading quotes is from Ed Sequoia, one of the best traders of all time. If you have nothing to do this afternoon, look up Ed Sequoia. Read about the man. The man is brilliant. You know how he trades? He prints off a chart, tapes it to the wall on his office, and walks to the back of the office and then turns around and looks at the chart and says, which way is this market going? Is it moving up? Is it moving down? That's how the guy trades. He trades, I think it's like a 50-day breakout. If the market makes a new high or low in the last 50 days, he'll buy it by one tick. It only has to go one tick higher or lower. Anyways, I was going to say one of my favorite quotes is from Ed Sequoia. He says, if the best way to avoid losing trades is to stop trading. You're not going to get away from losing trades by, introducing another layer to your signals. That's not how it works. You need a reasonably good signal. You need a way to manage the trade once you're in it, and you need to have good money management. Never lose more than you can afford. Put a max cap on your daily drawdown. If you've done something stupid, exit the trade immediately. These are all things that are going to preserve your capital. When Adam was, when we were working on the DTS system and such, and doing the developing the programming and everything, every once in a while we had to step back and we had to say, okay, is this actually going to help the DTS system, or is this simple mental masturbation? Because, trading is fun, and if you want to play with the indicators in that way, go ahead. It's fun. I do it myself. Sometimes somebody says, hey, have you checked out this latest indicator? It's kind of cool. Go ahead, play with it. But then come back and trade. Right? Let that be playtime. Let that be fun stuff. But then come back and trade. Your objective is not to eliminate losing trades. That will never, ever, ever happen. I guarantee you, if anybody ever developed an algorithm that eliminated losing trades, it would be obsolete within the week. That's how quickly the market adjusts. Here's something that many people don't know. A lot of people get all excited about high frequency trading. They think HFT firms have the edge. You know that they burn out their software within a week? That's how quickly the market adjusts. As a small trader, you have an advantage in that you can take a broader view of the market. You don't have to know where the market's going the next second. That's what kills me about binary options. People always ask me, Eric, what do you think of binary options? Oh dear, just write me a check and send me your money right now. It'll be less painful. All right, I'm putting the soapbox away. I'm speaking from experience because I have been down that rabbit hole. I have made myself crazy trying to tweak my system out of losing trades. And then one very kind trader told me, it'll never happen. Run a decent stop. Give the trade a chance. And it's funny how well that works. I call it the best kept secret on Wall Street because nobody wants to hear it. It's like Richard Dennis from the Turtle Traders. He said he could stand on the street corner, or no, he said he could publish his trading strategy in the New York Times and nobody would believe it because it's not in the entries, right? That's what everybody obsesses about, but it's not in the entries. And you can look up Richard Dennis's trading strategy as well. It's not complicated. He also does a breakout strategy. we're kind of stuck in this sideways mode. I'm not sure we're going to see anything really happen today. So I think what we're going to do is we'll finish here with Francisco's question. Or comment. Francisco says, so I'm trying to select the best looking entries. It's hard as well as trying to let the trade run. Yes, it can be, especially when the market is like it is now. There's always the temptation to let the trade run out, but honestly, over the course of time, you're going to find that you're probably going to do better going all in, all out. But don't take my word for it. Journal your trades. If you haven't started journaling, you had better start, because of the 10% of traders that are successful, 99% of those guys journal. And that other guy, he's either a gifted trader, naturally gifted trader, or very lucky. And chances are pretty good that you're not that guy. So start journaling your trades, and not just writing down the entries and exits, but writing down why you took the trade. You need to have at least 2 reasons to take a trade. If you can't look at a chart and give yourself 2 reasons to get into a trade, don't take the trade. And then, very important, write down what you learned from the trade, especially if it's a losing trade. Like, for instance, if I took this trade right here, and let's say I set it up like so, and the trade goes up and it's a loser, well, I might make note of, in my trading journal, it was a very poor looking cloud crossover. So the next time it happens, I'll think back to this trade and it will be, oh, maybe I should wait for a better setup on that cloud crossover. For this reason, I think it's also important that you do a handwritten journal. There's something about the physical act of writing things down that imprints it on your mind a little bit better. Frederick asks, sometimes I see great setups within the hour before the cash session starts. Do you ever trade pre-market? Excellent observation, Frederick, because there's a lot of pre-market reports that come out about an hour before the North American Open. So there are some very good opportunities available there. No, I don't usually trade them, but only because I'm on the Pacific Coast. I'm on the West Coast, so that would be like 5:30 in the morning, and trust me, I have enough difficulty hauling my butt out of bed to make the 6:30 open. But yeah, you're right. There's a lot of times there's some great opportunities because there's a flood of orders that come in pre-market. So if you're interested, check out the market, or if you're in like the Eastern time zone, where it would be like 8:30, by all means, check it out. Yes, there are some good opportunities to be had. Okay, gang, I will see you on Monday. Have yourselves a wonderful weekend. We'll talk to you then. Bye for now.